What's up, guys? We are at Monday, May number 11, and I'm sitting here before the market opens, and Zillow stock pre-market is up. Everybody that owns Zillow stock knows that Thursday and Friday were quite incredible days if you were a stock owner for Zillow, but here, pre-market, they're up 0.5%, back up to about $53. They closed the day on Friday at about $52.50, right? 52.69 is what it's showing here on Google. They shot up to about $58, $59 on Friday, and on Wednesday, just on Wednesday, they were trading at I'll tell you the exact number, $42.92. So from Wednesday, May 6th to Friday, the end of the day, they went up $10, but they shot up. I sold on Friday some of my shares at $56.11. They shot up to at least about $58 somewhere by midday on Friday. So where is the stock going in the future? This week, I don't know. I don't know where it's going to go this week. It's up pre-market. I thought it would have maybe been down again this week and went back into the 40s, but maybe it'll go back up. Maybe it'll go back into the 60s where it was before the health crisis started. Nobody knows. What I do know is that in quarter one of this year, of 2020, Zillow reported earnings well above expectations. They reported that they made $1.13 billion, which was 148% over quarter one of last year. Their debt did go up. So they were at about 168 million net loss in terms of their debt, but every company's taking on debt right now to get through what could be looming in the economy. That being said, a top Zillow economist says that we are basically, you can look at end of April or May as the bottom of the housing market. Zillow, let's face it, they've got more information than anybody in terms of interest into the future, right? Because they see how many people are using the app, and they've got all this data from the last 10 years of, okay, when this many people use the app, how many transactions happen. They know kind of, or better than anybody, their economists using their data can predict the coming months better than anybody. 3 out of 4 home shoppers use a Zillow-owned website, whether that's Zillow.com, whether that's Trulia, StreetEasy in New York. 3 out of 4 home shoppers are using a Zillow website for their online shopping. Their top economist believes we're at the bottom of the housing market. So this end of spring, summer should be really good for everybody that's in real estate, for real estate values. I don't think real estate values are going anywhere. I've talked about this on a bunch of videos. Steve Harney, great real estate economist, Keeping Current Matters, says that 1 out of 2 homeowners, 1 out of every 2 homeowners in the US either own their home outright or have over 50% equity. So if you take out half of the homeowners that aren't going to fire sale, you only have half of the people that own homes left that potentially would fire sale. And I don't believe you're going to see this huge fire sale like you did in 08, 09, where people need to get out of their homes. Certainly if jobs come back, and that's a whole nother topic. But the big question is, where is Zillow stock going? Quarter one, $1.13 billion in revenue, attributed to their Zillow offers, their iBuying, which they just started back up. They took a pause there, right, from mid-March till now with the health crisis. But their Zillow offers, and guess what else? The flex pricing. Flex pricing means if I'm an agent, which I am, and we have flex in Connecticut, we're one of the few counties in the US that actually is in a flex market. It means that I pay Zillow for the transaction after it's complete in the form of a referral fee, 30 to 35% on a referral fee. The old model, and the model that the majority of the country is still in, is zip code pricing, where you buy premier agent pricing in certain zip codes up front. You send them the money up front, and you get all the leads, right? You get all the leads in that zip code for the month. As you start to see, and there's maybe 6 or 7 counties in all of America, we have 2 of them in Connecticut alone, that are doing flex pricing right now. They've been on pause with everything that's happened, and they're going to continue to roll out more counties this year in the flex pricing model. When you start to see that go across the country, and this is long term here, like I said, I don't know what the stock's going to do this week. It's up pre-market, great. I don't know what it's going to do in the short term, but I know long term, when you scale out flex pricing, where you're now dipping in, Zillow is dipping in 30 to 35% of the transaction, this $1.13 billion number for quarter one revenue is going to look small someday. They're going to have quarters at $2, $3, $4 billion someday that far exceed anybody's expectations as they start to scale out flex pricing, as they start to buy more of these iBuyer, Zillow offers, instant offers, whatever you want to call it, homes. They start to do those two things at a quicker rate, at scale, and you will see this stock accelerate. It could be long term, could be short term. Certainly don't know what's going to happen this week. By the way, I'm not a financial planner, I'm not a financial analyst. All I know is a little bit about Zillow because it's something I use, and I want to share that with you. I do believe long term this is a great buy. Like I said, I sold on Friday. I think there's going to be some more peaks and valleys. I could be wrong. I've been dead wrong on stocks plenty of times. But I do believe long term, Zillow is going to be a very expensive stock based off of where I think their revenue is going to go in the future. Love to hear your thoughts if you're an agent or if you're even just a consumer that uses Zillow, or maybe you're somebody that's a stock investor and you've been watching Zillow. Please leave me a comment and don't forget to subscribe. Appreciate you guys.